Hey everyone, it's Steven here. In today's video, we're diving into the age-old debate of investing versus trading and which one is better. Which one will make you more money, or can you do both? And of course, the pros and cons of each, so stick around because you're about to get schooled, but in a very fun way. No boring spreadsheets here. Well, maybe a little, but I promise you'll love it. If you've got friends who are into stocks, or maybe you've watched the news, or maybe you scroll through social media and someone's talking about stocks. Maybe you've heard your friends say, I made X amount of dollars off this trade, and then you're like, okay, cool, I'll download a stock app and I'll start investing too. Then you buy your first stock and it's in the red. Eventually, panic sets in and you start thinking, why did I buy this again? You realize you've invested in a company because your friend mentioned it, but you have no idea what they actually do. Sounds familiar? Yeah, I've been there too. So let's talk about what's really going on here and whether you should be investing or you should be trading. First up, let's talk about long-term investing. This is like planting a tree. You buy into a company and you let them grow. Think about it as your financial slow cooker. You let it simmer for years, maybe even decades. No need to freak out over short-term price swings. You can mix it up with mutual funds, ETFs, which stands for exchange traded funds, or single stocks, whatever floats your boat. But the main goal here is slow and steady growth. You're not in this for quick wins, you're in this for the long haul. Investors typically focus on companies that have strong fundamentals, things like revenue growth, solid management, and a competitive edge in their market. The idea is to let the stock appreciate over time while also benefiting from dividends if the company does pay them. Over the long term, stock investing tends to be more stable than stock trading. Stock investing can also feel less stressful. Historically, the stock market has delivered an average annual return of around 6 to 8% after inflation, and this is according to historical data. Not bad, right? Now, stock trading is a completely different beast. Traders are like the adrenaline junkies of the stock market. They're looking for short-term gains, often buying and selling stocks in a matter of minutes, hours, or even days. They're not planting seeds to grow into a big tree. They're more like picking ripe fruit from the market and hoping to sell it before it goes bad. There are two types of traders: swing traders, where you buy a stock and you hold it for days or weeks, and day trading, where you're in and out in a single day. Traders focus on price fluctuations and short-term trends. They use technical analysis, chart patterns, and indicators to predict where a stock might go next. They may also keep an eye on the news, earning reports, and even global events. So let's break down the pros and cons. First, let's talk about investing. You don't have to stress about crazy price swings. It's slow, consistent, and most importantly, your investments compound over time. You don't need to do a ton of research either. Just sit back, relax, and let compound interest do its magic. Compounding is when you earn returns on your investment, then those returns start earning returns. When you invest money in the stock market, you create the potential for an investment's value to compound as time goes on. The power of compounding increases. And the tax benefits. Stock investors save a significant amount of money compared to stock traders. If you buy and sell a stock in less than 1 year, you'll be subjected to short-term capital gains. If you hold that stock for over a year, you'll fall into the long-term capital gains bracket, which means less taxes when you sell. Long-term capital gains tax rates are 0%, 15%, or 20%, depending on your taxable income and your filing status. Now, the cons. Growth is slow. It's not always thrilling when you're investing. It's like watching your grandparents run a marathon in slow motion. And if you're investing in something like a Roth IRA, you can't touch it until you're 59 and a half without penalty. So yeah, you better start planning your retirement party now. Now, let's talk about trading. The pros? Well, the biggest one is that you can make money faster, like really fast. Think of it like a high-speed chase in a movie. You'll also learn new skills like emotional control. It's kind of like becoming a stock Jedi. You can make money in seconds, minutes, hours, or days instead of years. Quick profits can be thrilling, and once you get the hang of it, trading can be really fun. Liquidity is another advantage of trading stocks. Most stocks can be bought and sold quickly on the open market, which means you can access your funds when needed. This liquidity makes it easier to adapt your portfolio to changing financial goals or to market conditions. However, while some investing methods offer liquidity, there may be some delays and penalties for withdrawing your funds. But of course, there are cons. Higher risk, more stress, and the taxes. These short-term capital gains are going to cost you a lot. Plus, you could lose money just as fast as you make it. It's estimated that 90% of day traders will lose money over time, underscoring the importance of risk management. Short-term capital gains is a tax on profits from the sale of an asset held for a year or less. Short-term capital gains tax rates are taxed at regular income, which means they're subject to federal income tax rates. And I'm sure Uncle Sam loves that. Let's say you start investing at 18 years old, you open up a Roth IRA, max it out every year with $6,000, and you invest in growth stocks for the next 47 years with a market return of 9% annually. Your $282,000 investment could turn into $4.4 million by the time you're 65. And the best part? No taxes on your profits. Zero. It's the ultimate buy, sit back, and relax move. Now, trading, it's a completely different game. You could make a few $1,000s in a day, but it's harder to do unless you're starting with a lot of capital. So for example, if you buy $100,000 worth of a stock at $15 and that stock goes to $30, you'll make 100% of your investment, which would be $100,000. However, you need a stock that could jump 100% for you to make that profit. Unlike investing, trading requires a great deal of time, effort, and understanding of the markets as well as research. Many traders are experienced and have a great sense of how the market works. And while investors may also be experienced, a lot of them are not. The most important thing is knowing when to sell. Buying stocks is easy, but knowing when to cash out, that takes strategy. Personally, I've got some rules and I know stocks that will probably double and I'll go in more aggressively, while there are some that I'll sell after a small gain. It can be very unpredictable when it comes to stock trading. So what's the key takeaway? Long-term investing is probably for most of you out there. If you're patient, consistent, and want to have a lot less stress, I would definitely recommend the hands-off approach. If you want to avoid risk in trying to time the market and you're focused on long-term planning, then long-term investing is probably the best option for you. Trading is more like a roller coaster ride, thrilling but not for the faint of heart. It's the riskier path. You'll find that it's common for many novice traders to lose money and even lose their entire account balance. Even if you have a defined plan, seasoned traders have the emotional decision-making skills that can only be acquired through experience. However, if you have a higher risk tolerance and believe somehow you can defy the odds and successfully time the market while also dedicating the time it takes to be a profitable trader, this option might be suitable for you. Remember, set a budget first and invest with money that you can afford to lose, and only trade with small portions of your portfolio. If you're new, start slow. You don't want to mix your long-term investments with your trading account. That's just asking for trouble. Stock investing is best for long-term wealth building, while stock trading is best for those with experience who want to actively engage with the market and they're comfortable with higher risk for potentially quicker gains. No matter which one you choose, always do your research. If you enjoyed this video, hit the like button, subscribe, and leave a comment if you want more stock talk, or if you just want to share your gains and losses. Either way, I'll see you in the next video.